we'll make a start from here then. So, as I was saying, we're here to look at accruals and prepayments on the financial accounting, preparing financial statements unit from level 3. And accruals and prepayments are one of a number of period end adjustments which you need to be able to do and need to be aware of as part of the FAPS unit. It's also really helpful when you start doing the DAFE unit at level 4, and also quite useful for any practical real world experience that you're going to get in the future, especially around either working in a practice doing year-end accounts or working in a business doing sort of month-end, year-end work. It's a really useful thing to be able to do. So what are we going to attempt to cover? So understand the core concepts of accruals and prepayments and why they're necessary. So why these period end adjustments are necessary. Be able to calculate the value of the adjustments. So be able to accurately calculate value of both accrued and prepaid expenses and income. And then be able to post the journal entries. So correctly apply your double entry bookkeeping knowledge to be able to record the adjustments in a set of general ledger accounts. So that's what I'm hoping to achieve. Obviously, I'm here for an hour. I'm not here for 3 weeks. So some of it will land, some of it might not. You've got the recording, or you will have the recording, and the slides as well. So you can go back through it in your own time, which I think will be helpful. So first thing that I want to say is core concept of what's known as the accruals concept, or sometimes some books call it the matching concept. So income and expenses must be recognised in the accounting period to which they relate, regardless of when cash changes hands. So that's the whole concept of accruals, or what's known as the accruals concept, or the matching concept. So it's not about when cash changes hands. It's literally about when the income was earned and when the expenses were incurred, not when you paid for them or received the cash from your customer. So that's the overarching concept behind which all of this sits. Yeah. So what are accrued expenses? So accrued expenses, an expense that has been incurred in an accounting period but's not yet been paid or invoiced by the year-end date. Yeah. So can imagine if we, for example, rent an office. Rent's a bad example, but we'll use it. We'll go with it. We rent a building and we pay our rent in arrears. So we rent the building from 1st of January to 31st of January, and then we pay at some point in February. Yeah. Well, we're going to have used the service, yeah, the rent, but we haven't had the bill yet. Yeah. So we're going to need to, in that period of time, accrue that expense, yeah, because we haven't yet received the bill. So we'll explain it in a little bit more detail in a minute. So it goes back to that matching principle, that the cost of these accrued expenses need to be included in this year's statement of profit or loss. So when we're assessing our profitability, yeah, these expenses do belong in this period of time. Even though we've not yet received the bill for them, they very much do belong in this period of time. We also need to update the financial position, so the statement of financial position, because ultimately we owe some money for those accrued expenses. Yeah, so because we haven't yet received the bill, and when we do receive the bill, at some point in the future, we're going to need to pay that bill. Yeah, and therefore we've got what's known as a current liability on our statement of financial position related to these accrued expenses. So some common examples of accruals back out in the real world: utilities. Yeah, so utility bills, gas and electric. So you and I go home, we turn the lights on, and then we use some gas, we use some electric for a period of time, and then at some point, our utility supplier sends us a nice bill saying you owe us a couple £100 for turning lights on. Telephone bills are another example. So telephone bills, we use the telephone, yeah, and then we pay for the call charges. At least we pay for the call charges after we've made the calls. Yeah, so we at some point we've got a level of accrued expenses related to those call charges. In businesses, audit fees, we generally accrue those because they belong to this financial year, but the audit's going to happen after year end, isn't it? Yeah, so we're going to, in this year's accounts, we're going to accrue a fee related to the audit for those financial statements. And staff bonuses are another great example. So staff bonuses, usually we pay a staff bonus for a financial year, but we pay them in the following financial year. Yeah, so, but we might make accrue the expense into the correct financial period. Yeah, so there's a little diagram there just explaining almost in one sentence what an accrued expense is. It's the accounting term that refers to an expense. It's recognised on the books before it's been paid. So we need to recognise it now, pay it at some point in the future. Yeah, and that could be tomorrow, next month, next quarter, in the longest example for next year, potentially. So a bit of an example here then of accruing electricity. So we've got a scenario, our year ends the 31st of March, and we've got an electric bill for a quarter that goes from 1st of January to 31st of March, and that electricity bill arrives with us on the 15th of April, and the electric bill is for £900. So it's not been recorded anywhere. The first time we know about it is when the electricity bill arrives on the 15th of April. Well, quite simply, that bill relates to that year end, that year that ended on the 31st of March. So that expense needs to be in that financial year. Yeah, so we need to accrue the expense. So shown there is what we're going to do. We're going to debit electricity expense on a statement of profit or loss, which has the effect of increasing the total expenses for electric in that year. And then on this statement of financial position, we're going to credit an account called accruals. Now, you may see in some books they talk about accrued expenses being the account name on the statement of financial position. That's not incorrect at all. AAT like to split out accrued expenses and accrued income into two separate concepts. Out in the real world, you're likely just to post the statement of financial position element to an account that's called accruals. Yeah, which in this case is the credit, which creates a current liability because we owe the money for those expenses. So at the end of this financial period, we haven't had the bill, yeah, but we owe, at some point in the future, we're going to get a bill and we'll owe £900. So we've got a current liability. So at the bottom there, it sort of shows you what the logic is, if you like, for working out the value of the accrual. So the accrual is equal to whatever expense you've incurred in the financial year minus the value of expenses currently recorded. So you may, for example, know that your rent is £500 a month. Yeah, so you've got rent of £500 a month. You can run your profit and loss account at the end of the year, and you can look at the detail nominal in the general ledger for rent and see that you've got £5,000 in there. Yeah, so rent expense incurred, should be £6,000. Expense recorded is £5,000. You now know you need an accrual for £1,000. You've got £1,000 missing. You need to accrue that. Chances are you've not received the invoices, or you've not yet paid the bill. So accrued expense, that's accrued expenses. As well as accruals, then we've got this concept of prepayments, and prepaid expenses. So prepaid expenses, these are probably easier for us to understand because some of us have lived through eras of things like prepaid gas and electric meters and prepaid phones. Yeah, so good old top up Nokia 3310, where you went to the news agent, put a tenner on it. Yeah, that's you paying in advance.
I'm ready at 8. I want it to be done for 8.
Yeah, and then you use the service, and you pay for it in advance. So prepaid expenses occur when expense has been paid in advance of the accounting period to which it relates. So, very simple terms, you paid for something last year that you're now using this year. So you paid in advance. So think about out in the real world, we pay for insurance in advance, don't we? Yeah. So we pay our car insurance, or some people, at least you have the liability to car insurance in advance. So you pay your £500 a year or whatever your car insurance is. You may pay it all at once at the beginning of the year, but it covers for a 12-month period. Yeah. So from an accounting point of view, that doesn't all belong in January at the beginning of the year when you pay it. Yeah. It's equally split across the year. So ultimately, the cash has left the bank. Yeah. So you've had the financial impact, if you like. The cash has left the bank, but the benefit of the service that you're receiving, extends into potentially another financial year. So it spreads across financial years. So adhere to that whole matching concept that I explained then. We must remove the portion of expense that doesn't belong in the current financial year. Yeah. So you're going to remove the bit that's in the next financial year. You're going to remove that from this year's expenses because it's not an expense that belongs in this year. Yeah. So that's going to do two things. Yeah. It's going to reduce the value of the expense in the current year on the statement. So we're going to remove the expense from the current year. So statement of profit or loss, that will get reduced. And then we're going to create an asset on our statement of financial position because ultimately we are owed a service. Yeah, we've paid for it. Now, one or two things are going to happen. We're going to end up with our money back, an asset, we're going to get the money back, or we are owed a service that we paid for, both of which, from an accounting perspective, are considered to be current assets. So, key examples of prepaid expenses: rent. Typically, you pay rent in advance. Not everybody does, but typically you do. Insurance. So you generally pay insurance before you use the service. And then things like annual software subscriptions. So if you're paying like an annual subscription for, I don't know, Sage is an example. So Sage do offer annual subscriptions. You'll pay an annual subscription to Sage, but actually it covers a 12-month period. Your year end could be the middle of the year. Half of it belongs in this year, half of it belongs in next year. It's a bit of a visualization then. I think sometimes it's just easier to visualize these things than it is me sitting here talking about it too much. So, got a financial year in line with the calendar year. So financial year ends on the 31st of December, and on the 1st of October, you pay an annual insurance premium of £12,000. Yeah. So based on the fact that we've got a financial year that ends in end of December, nice simple numbers here. £12,000 per year, £1,000 a month. So 1st of October, you pay £12,000. Yeah. But all you want is October, November, December, 3 months. Yeah. You want 3 months in the current financial year. Yeah, so at year end, you've used 3 months of that service. Yeah, that insurance premium. You've used 3 months of it. Yeah, so £3,000 wants to sit in the financial year ending 31st of December. What you're required to do then, the action that's required, is to remove 9 months worth of expense from this year. Yeah, and prepay that into the following year. Yeah. So it's just about understanding the bit that belongs in this period and the bit that belongs in the next period. The bit that belongs in the next period doesn't belong in this period, needs prepaying out. Yeah. I've missed a slide out there about what the journal looks like to do that. Yeah. So here you are going to debit prepayments. Yeah, because prepayments is the asset. You've got an asset related to the prepayment. So debit prepayments, credit, in this case, insurance, but whatever the expense account is that you're prepaying the expense out of. So that's expenses. Yeah, so accrued expenses and prepaid expenses. Now we have the flip side of expenses, which is income. Yeah, so on the AAT FAPS exam, you also need to be aware of the concepts of accrued income and prepaid income. Now, prepaid income in the real world and the real world is sometimes known as deferred income. So accrued income, income that's earned during the accounting period, but it's not yet been invoiced or received. Yeah. So done some work. Let's think about, let's say you're a freelance accountant. So you're a freelance accountant. You've done a load of work this month, but you haven't invoiced it. Well, you earned it this month. You earned that income this month because that's when you did all the work. Yeah, but you've not yet invoiced it. So really, you should be accruing the income in this month. Yeah, and then you're going to invoice it at some point in the future. Yeah, so the accounting treatment to do that, debit accrued income, yeah, which is a current asset. Yeah, because you're going to receive the income at some point in the future. A bit like receivables, yeah, where you're going to receive it at some point in the future. Accrued income, you're going to receive that income at some point in the future. And then you're going to credit the income account, because what you're saying is, I've earned that income in that period of time, in that year. So I'm going to credit the income account just like you would if you received the money today. Prepaid income then that's the opposite of that. So that's income that's received in advance for goods or services that are going to be provided in the following accounting period. Yeah, so this is me invoicing a customer for some work that I'm going to do next month, next quarter, next year. Yeah. So I've not actually earned the income at this point. I've just invoiced it in advance. So here we need to reduce the income that's in the current accounting period. Yeah, so we debit income account to reduce the income in the current period, and then credit prepaid income, which is a current liability. The reason it's a current liability is I've received the money. I've got a liability now to either provide the service or give them their money back. Yeah. So very much a current liability. Income is reduced in the period because it doesn't belong in this year, it belongs in next year. So impact of accruals and prepayments on financial statements. So we hopefully know we've got 2 key financial statements: statement of financial position, statement of profit or loss. So statement of profit or loss ensures that the big impact there is that we ensure that profit is accurate by matching expenses to the period in which they were consumed. Yeah, and also matching income into the period in which it was earned. Yeah, so that's the true implementation of the accruals concept and the matching concept. So accruals, they increase. If we accrue something, yeah, certainly from expenses perspective, we're going to increase the expense, which has the effect of decreasing profit. Prepayments or prepaid expenses decrease the expense and increase profit. Yeah, everything else being equal. Yeah. Statement of financial position then records the temporary amounts that are owed to us or owed by us at a year-end date. So accruals are a current liability. Yeah, accrued expenses, this is a current liability. We owe the money. Prepaid expenses, current asset. Yes, if we prepaid for something, we are owed either the money back or the service. Yeah, so we're owed the value of the service or the actual cash value of it. I thought it was useful to just highlight some of the sort of pitfalls that we see on AAT exams. So whilst I've not got 100 hours this evening to go through everything, and I may do another session looking at this, it's really important that at the end of the financial period, you do your accruals and prepayments as part of your period end adjustments. On the first day of the following period, you need to reverse the effects of everything you've just done. Yeah. So you've accrued expenses at the end of the year. You need to undo that accrual, so reverse it on the first day of the following period. That's one thing that students forget to do. They forget to reverse the journals. So accruals and prepayments are temporary period end adjustments, and they should be reversed on the first day of a new accounting period, so expenses are not double counted when the actual invoices arrive. Because if you didn't do that, yeah, so we've accrued it, which has increased the expense. Yeah, if we don't reverse the accrual when the invoice lands, we've counted it twice. We accrued it in the previous period, and now we've received the invoice in this period, and we're now going to double it up. Yeah, so we need to reverse it so that when the invoice lands, it just nets itself off. Yeah, so there'll be no impact in the current financial period, which there shouldn't be, because we accrued it and it related to a previous period. Yeah. Another thing that we see a lot of is people miscalculating the number of months for things like prepayments or accruals. Yeah. So calculate the months used instead of months prepaid or vice versa. Draw it out on a timeline. Yeah. So you've got that 12 months there. Yeah. The invoice relates to, well, the invoice is for 12 months. The year end point is here. Therefore, I need to prepay this bit out. Or the opposite is, we can draw the timeline out, understand how much expense we need to accrue. Yeah, just draw it out, make sure that you calculate the right number of months. Check the dates. Yeah, AAT generally do full months. Yeah, so accrue based on the number of full months. And AAT are usually quite generous that their accruals are like, 1st of January, 1st of January. They're not like mid-month. They are full months. Another thing that we see a lot of is confusing income and expenses. Now, that sounds really obvious, but we do see, or I've definitely seen, people treating prepaid income as an asset instead of a liability. Yeah, prepaid income, if you think you've been paid in advance, you've now got a liability to either give the service or the goods that you've been paid for, or give them their money back. Prepaid expenses are an asset, yeah, because you're going to receive the goods or service or your money back. Yeah, as it says there, if someone paid you in advance, you owe them a service. You have a liability. Yeah. So, 4 golden rules, really. Yeah. So, accrued expenses, add the expense to the statement of profit or loss, and add a current liability to the statement of financial position. Prepaid expenses, minus it from expenses. Yeah, so credit it from expenses. Yeah, and debit current assets. or current asset on the statement of financial position. So that's what we do with expenses. Income, add it to income, so increase income. So you're going to credit income, debit the current asset on a statement of financial position. For prepaid income, minus it from income, yeah, so debit income, yeah, on a statement of profit or loss, and credit a current liability. Yeah. So really, that slide's the key one. If you can remember that and what to do with that, then you've nailed accruals and prepayments. Yeah. That's the key thing. If you can remember that, yeah, what to do with accrued expenses, what to do with prepaid expenses, what to do with accrued income, prepaid income, and you remember you need to reverse it on the first day of the following period, you know everything you need to know about accruals and prepayments.